Hi everyone, I am Rebecca, your insurance lady, and I'm here to help you to understand insurance concepts for property and casualty insurance. The purpose of my videos are to try to break down elements of insurance so that it's easier to understand. So in today's video, I'm going to discuss the law of agency. It's very important to understand the agent's authorities and how they impact the company they work for. Whether you have employees for your own business or you work for a company, law of agency is important. The law of agency is the relationship of the agent and the principal, also known as the insurer. It states that the acts of an agent are the same as the acts of the insurer. So if you worked for a company and the customer sued for some wrongful doing of the agent, since the agent is technically a part of the company and representing the company that they work for, the insurer is vicariously responsible for the acts of the agent. So the customer would end up suing the company or the principal. The acts of an agent are the same as the acts of the insurer, and that is the law of agency. So agent versus principal. So the party who is acting on behalf of the company is the agent. That is the employee, also known as the producer. The party who is allowing the other party to act on their behalf is the principal, also known as the company or the insurer. So when the agent relays information to the customer about insurance, they should be operating on behalf of the insurer. When the agent sells insurance policies, they are obligated to educate the customer and explain to the customer exactly what type of coverages they're getting. The agent is responsible for the information they put out to the customer. There can be times where the agent is relaying information to the customer, and because the agent is an employee, they might not realize the authority they have in their role. So the agent has an expressed authority, an implied authority, and an apparent authority. And if you've noticed, I've color coded it, kind of looks like the lights to a traffic stop light with green, yellow, and red. And you'll understand later why I did that. So the expressed authority. This authority is usually written out for the agent. The agent's job requirements that's written out. It lets the agent know the function in which they will be performing their actual job. The documents will tell the agent how to act on behalf of the principal. So the easiest authority to have is an expressed authority because it's like a roadmap. It's there for you, it's clear, and it's easy. So the implied authority is usually not a written document. It's like the things that an agent does to get the job done. Everything the agent does cannot fully be written down on a contract. So there is an implied authority. An agent might not have an expressed authority to be polite with the customer, but the agent is polite because it is an implied authority that the agent has. An agent may not have expressed authority to keep a clean workspace, but it is an implied authority that the agent has. The agent may sell a policy to the customer and want to hold the door for the customer or shake the customer's hand, and the agent is still acting on behalf of the principal with an implied authority. An implied authority is not expressed to the agent. It doesn't say, here's written information of what you need to do, but it's still authority that the agent has. It is implicit and it just kind of goes without saying. Okay, now to the red color. Apparent authority. When someone apparently does something, there is an assumption being made. It appears to be, but not for sure. So in this case, the customer assumes the agent is authorized based on actions. This can leave the principal in a bad position, especially if the agent did not have expressed or implied authority to act on their behalf. The third party, who is the customer, will typically assume that they have that authority because of the way that they act in the situation. So here's an example. So customer Bob comes into the office and is upset that we denied a claim to fix his glass. So customer Bob expresses his frustration in the office to Agent Dan. In order to calm customer Bob down, Agent Dan tries to empathize. He gets customer Bob to calm down, and by the end of the conversation, Agent Dan has agreed to talk to the claims department for the company. He takes the customer's receipt for the windshield and walks him to the door and says, "Don't worry, we'll take care of it." The problem here is that Agent Dan does not have the authority and was not acting in the scope of his expressed or implied authorities. He did not handle customer claims. So since Agent Dan gave the customer apparent authority that his claim would be taken care of, the company may end up having to pay out for the claim. Why? Because of the law of agency. The act of the agent is the same as the act of the insurer. So now you can understand why a color-coded green, yellow, and red. Expressed and implied are authorities that the agent has. The difference is that expressed is a written authority. It's obvious because it's straight out there for you. And implied is not written, but basically kind of goes without saying. But not as clear as the written. You just know you have to do it. Apparent is an authority that the third party or customer assumes the agent has, but may not necessarily have. So that is your law of agency, and that is also authorities of an agent. I want to thank you for viewing my channel. Please subscribe if you want to see more videos, and if you like it, hit the like button. And if you're looking for study material, I'm partnered with Kaplan Financial Education, so click on the link below and browse some courses. You'll get a discount with my link, and so hopefully you guys check that out. Thank you again. My name is Rebecca, and I am your insurance lady.